Assalamualaikum and hi everyone. Welcome back. This is the presentation on Mfrs 102 inventories, and this is the second video on this series of presentation. And in this session, we are going to look at how to calculate the cost of inventory with a focus on the measurement of inventories with some examples that is trying to illustrate on cost of purchase inventories and also cost of manufactured inventories. So let's start. The measurement of inventories. This is example 2 of this Mfrs 102. The example 1 is in the previous video. So this is related to the cost of purchase inventory. So 1st of November, PKP Berhad purchased 2,000 units of product YY. So that was actually inventory purchased by the company, and these are the details of the purchase. You have the invoice price, also known as list price or purchase price. This is 150 per unit, so you need to be careful with the units given, and because we purchased 2,000 units, and the trade discount was also 3 ringgit per unit, so this has to be deducted as to arrive at the cost of inventories. Sales and service tax. Sales and service tax should also be included in the cost of inventories. This should be based on 6% of the invoice price. We'll be looking into that. Rebate. So rebate here is only if you purchase more than 1,005. So 1 ringgit per unit. So in our case, we purchased 2,000 units. So therefore, we will be entitled to the rebate. So these are some of the costs also being incurred by PKP per transportation costs, handling costs, storage costs, and you have admin costs. And admin costs, storage costs, and exchange loss are the costs that should be excluded from our lecture. I've mentioned this, and that shall not be included in the cost of inventory, and that has to be expensed off. Import duties will be included. So we are asked to calculate the cost of inventory that were being purchased. Before that, just have some recall of what you have learned before. These are the costs that needs to be excluded from the cost of inventories. So here you can see that the storage costs were actually mentioned under Mfrs 102. Exchange loss due to the acquisition of inventories in a foreign currency should also not be included. So these are the example of costs that should be expensed off, as well as the admin cost that relates to the admin department that relate to the purchase of the cost. So those are the costs that shall not be included but must be recorded and expensed off. Next, let's look at the calculation of the purchase inventories. So if you can still recall the cost of purchase from the lecture, previous videos, it consists of invoice price according to Mfrs 102. All directly attributable costs, which includes import duties, other taxes, and as long as those taxes are not recoverable from the taxing authorities, transportation costs, handling costs, and freight insurance. And if you have any trade discount, rebates, and trade allowances, that must be deducted. So let's look at our example and the answer here. So invoice price will be included. The trade discount is 3 ringgit, and this is for 2,000. So you have 6,000. Remember, 3 ringgit is per unit, and that gives you the deduction. The rebate is based on the 1 ringgit, and the price or the purchase item was 2,000, so the rebate is 2,000. Yeah, and remember that is only entitled for 1,500 units and above. Sales and service tax. So if you can see here, sales and service tax should be on the net invoice amount. So this is the not net invoice amount, and 6% is the sales and service tax. So it should be included in the cost of inventory. Transportation costs, as we have decided earlier, that handling costs and import duties, these are all directly attributable costs. Therefore, the cost of inventory purchased here is 318,140. So let's look at the second example, which is example 3, which is on focusing on the cost of inventories that are being manufactured. Yeah, the earlier one was the cost of inventories in the case of a trading business, but this is for manufacturing inventories or manufacturing. Here is manufacturing entity. So you have a Agric Berhad produces fertilizers for resale to plantation companies. So these are the goods that are being produced as a result of the manufacturing process. So the following information relates to the finished goods of an item called nitrofosca for the year ended 31st of December 2000X9. So this is the fertilizer with the name of nitrofosca. So you have the detail here, yeah, the name of it, and here is the raw materials that are given in terms of the information per bag of that so-called fertilizer. So the purchase price per bag is 50 ringgit, right? So we need to look at the number of items being purchased. So and then you have the import duties, 250, cost of processing the purchase order. Remember, these are all per bag. We are interested to know what are the costs of the purchase for the 20,000 bag. Right, so let's look at the detail here. You have more or less the same like what we have earlier. Cost of processing the purchase order, this shall not be included, these are excluded. Freight charges and transportation costs and trade discount needs to be deducted. And these are some of the production costs, which is to convert these raw materials into the finished goods called nitrofosca. So these are the direct labor per bag of raw material per bag, and the variable production overheads per bag of raw material. So this is per unit. Remember, we are purchasing 20,000 bags, and fixed production overhead incurred during the year, the total is 100,000. So let's recall what are cost of purchase again. These are the cost of purchase as what I've mentioned earlier in case you have forgotten. So you will have to take note on what are the costs that shall be included and what are the costs that shall not be included. So you are also given information on the usage, abnormal wastage, output, and closing inventories. So you have the information on raw material consumed, which is for 15,000 bags. The finished goods that were being produced is 14,500 bags. Remember, the fertilizer is having the name of nitrofosca. The abnormal wastage materials was 500 bags. Remember to exclude this from the cost of inventories. Finished goods which are unsold, out of what being produced, there are some unsold inventories, which is the closing inventories of 2,500 bags. So you are asked to compute the cost of purchase of the material, referring to the raw material. Then you are asked to calculate also the cost of closing inventory of that material and the cost of the closing inventory for the finished goods nitrofosca. So let's do that. First, we start off with the cost of purchase of material, raw material. So let's just recall again the cost of purchase. It will be having these three components, right? Invoice price, directly attributable cost of the purchase, and also deducted with the trade discount, rebate, and trade allowances. So if that is the case, we have our item that we have selected. The first one is the purchase price. Remember, we are purchasing for 20,000 bags as per the previous information, if you can still recall. Yeah, we are purchasing 20,000 bags. Here is the information, 20,000 bags. So I go back to the slide, and therefore that should be multiplied by 50, so that was 1 million. The trade discount is 5%, 5% from the purchase price, so 50,000. And now the net invoice price is 950,000. For the freight charges, earlier it was given per bag, so now you take 180 times 20,000 bags, you have 36,000, and the import duties for 20,000 bags was 50,000. So the cost of the purchase material is now 1.036 million, which is for the 20,000 bags. So for the 20,000 bag, the cost is 1.036 million. So let's look at the second part, which is to calculate the cost of the closing inventories of material for the raw material. If you can still recall earlier, the raw material purchase was 20,000 bags, and the raw materials consumed from the information, it was 15,000 bags. So therefore, it gave you the closing inventories or the unsold inventories for the raw materials to be 5,000 bags. If that is the case, we are now going to look at what are the costs of closing inventory for the raw material. So as you know, the cost of purchase of material were for 20,000 bags. So this is 1.36. So to get the closing inventories, you need to first find out what are the costs per bag. Cost per bag. To find the cost per bag, you will take 1.036 million divided by 20,000 bag. Remember, this is the one being purchase, the cost of purchase material. So you will get 51.8 ringgit, right? So therefore, to find out what are the costs of the closing inventory or the unsold inventory, which refers to this purchase minus consume, which is 5,000 bags, you take 5,000 bags and multiply it by 5180. That will give you 259,000 to be the cost of the closing inventories relating to the raw materials. Now we go on looking at the cost of the closing inventories that relate to the finished goods. Remember, it is nitrofosca. So let's recall again the cost of purchase. Remember, these are for the cost of items that are converted from the raw material to the finished goods. So it will involve some manufacturing process. So the cost of the manufactured inventories. Before this, we were looking at the cost of the closing inventories of the raw material. So now we're looking at the cost of the manufactured inventories, which relates to the finished goods. So this is relating to finished goods, right? So how do we do that? Let's recall the cost of purchase under the cost of manufactured inventories. Normally we have purchased some raw materials or some direct material. It can also or it must also include some cost of conversion. This is from the previous lecture in the first video, which includes fixed and variable manufacturing overhead. Right? It will also include some direct labor and production overhead. And regarding variable production overhead, such as indirect material and indirect labor, it will normally vary directly or nearly directly with the volume of production. It will also has to include the fixed production overhead. So such as those costs of for depreciation and maintenance, and also this has to do with the cost of factory management overhead. So these are normally constant regardless the volume of production. So let's look at our case here. So the raw material consumed first before it is converted into the finished goods. Remember, the cost of the purchase material per bag was 51.80. 51.80 was on our previous slide here. This one. Okay. So let's look at the next one, the next item that is relating to the cost of purchase. So the next item is the direct labor. Direct labor is the one that relates to cost of conversion. Remember, 3 ringgit is the cost of the direct labor per bag. So multiplied by 15,000. Remember, this is the 15,000 bags that are being consumed, which were the information given earlier. Next are the variable production overhead, 4 ringgit per bag, and times 15,000 bags, which are the raw materials consumed, 15,000 bags. So that was the variable production overhead. Next is the fixed production overhead. That should also be included, as that was also the guidance of the Mfrs 102. So the fixed production overhead was actually 100,000 in total, and now we need to apportion to know what are the amount that is attributable to the raw materials consumed. So the raw material consumed was 15,000. So divided by 20,000. Remember, this 20,000 is the cost of the raw material purchase, but only 15,000 were consumed in the production or the manufacturing process. So we do the apportionment and we get 75,000. And if you cannot remember, I've put this here, the information from the previous slide on the raw materials consumed, finished goods, abnormal wastage, and also the unsold finished goods, right? So next is for us to look at the closing inventories, remember. So we need to go and reduce the abnormal wastage, because this are the thing that not to be included in the cost of inventories. Next is the cost of production. The total will now be 925,100. What we're going to do now is we're going to find out what are the cost of closing inventory. Remember, the finished goods produced was 14,500. The finished goods that were unsold, which refers to our case, were 2,500 unsold inventories. Now, the cost of closing inventories is for you to take the 900,025 here, 100, then divided by the 14,500. 14,500 is the number that are being produced, and we are now interested only for the unsold inventories, unsold or the closing inventories, which is 2,500 bags. This 2,500 actually refers to this. Okay, then you get the cost of closing inventories to be 159,500. So that's the cost of closing inventories for the finished goods that is as a result of the manufacturing inventories. So now let us move on to the next part, which is on the cost methods and formulas. Cost method or formula. So this was what you have learned before, back maybe in your earlier studies, particularly when you were doing accounting for inventories, right? So, or maybe in your costing studies as well, where you have learned the cost formula that were used to assign the cost of inventory. You might be familiar with the first in, first out, FIFO, and the weighted average. But this is the one that will be something new to you, which is the specific identification method. And the specific identification method, what are the inventories that are normally using the cost formula specific identification methods? These are normally for items that are not ordinarily interchangeable. It has high value and it is distinguishable from other items. What are those items? Some valuable paintings, some precious metal, diamonds, airplanes, which are normally being done through special order, like diamonds, through it is sometimes they are being tailor-made for the particular buyer. So therefore, cost of each of these inventory item represent cost directly traceable to the item concerned. So basically, we need to go and look at how much is the cost of inventory specifically related to that particular inventory items that is normally of high value. So for the first in, first out, I think this is quite familiar. So these are for large quantities, and these are where purchase item that were purchased first, inventories are sold first, and if there are closing inventories at the end of the year, they are always assumed to represent the inventories that were purchased most recently. So these are the effect on the income or the profit and inventory valuation, where this will result in a higher profit, lower cost of goods sold, and higher closing inventories. So these were what you have done before, and this is just focusing on what you have learned. So we're just doing kind of revision. For large quantities of identical item, you also have another option, which is the weighted average method, or the WAM. So this is normally assuming that inventories purchased or being produced by the entities at different dates will be aggregated so that the consumption is on a proportionate basis. Either consumption or in the sale or use is on a proportionate basis. However, there's one more cost formula. These are actually not allowed by the Mfrs 102, even though this is allowed by the US GAAP, where the last in first out, where the cost methods are not permitted by the standard. So these apply for large inventories, which large quantities of identical item, and we assume that the most recent are being sold out first, but these are not allowed by the FARS 102 inventories. What happened is that the closing inventories at the end of the accounting period are normally representing the item purchased or produced earlier. So these are the effect of this formula or cost method in the income and inventory, where it was the reverse effect of the FIFO method that results in a lower profit, higher cost of goods sold, and a lower closing inventory valuation. Okay, we shall stop there. We will continue with the inventory system in our next video. Till then, I'll see you when I will see you. Have a nice day ahead, and Assalamualaikum and bye-bye.